Welcome to CEO Money. I'm Michael Yorba. Thanks for joining with me. I've got Keith Schneider, CEO of MarketGauge with me today. Keith, welcome to the show.
Thank you for having me.
I'm glad you're here. All right, Keith, we've had an exciting, to say the least, market movements, whether it's the S&P, it's the NASDAQ, it's gold, or it's Tesla. I know you wanted to start off with Tesla today. Let me bring up my charts, and you bring up yours. Tell me what's going on with Tesla.
Well, I mean, as you know, Tesla is very controversial because of its CEO, and it's really almost hard to believe how much press and bad press he gets. And then you get, of course, people who absolutely love and everything that he's doing, from SpaceX to the Boring Company. But he is certainly a controversial figure. And if you take a look at the fundamentals of the company, they're certainly very richly priced. But you can also say something that is similar about a lot of tech companies, including Amazon, that lost money for probably a decade or more and is now the most valuable company in the world. So that's quite interesting. So at the moment, there are a couple things to observe, and Tesla has really been doing well, especially during this really volatile period. And this chart here is a daily chart on Tesla. Today, it actually did something that is quite interesting. The first thing to note is the top chart here is the price chart of Tesla, with the blue line is the 50-day moving average. You can see the 200-day was violated just twice in the last couple of weeks and rejected. But the more important feature here is, amidst all of the controversy, the stock has actually, since the meltdown starting in October, has clearly outperformed the S&P. So one of the proprietary indicators we use looks at the relative performance of any particular instrument benchmarked against, let's say, the S&P. So this middle indicator here is basically showing you that Tesla, starting in October, which was really when the decline started, right in this area in here, right, once it penetrated this black moving average of the relationship between Tesla and the key U.S. benchmark, the S&P, it's been really on a pretty good outperformance. And also with it recovering into now what we call a bullish market phase, when the price is above the 50-day moving average and the 50-day is above the 200, that is a bullish market phase. And we re-entered that well in advance of what the S&P is doing. And of course, you can see that on a shorter term basis and both on a longer term basis, that ratio, and that which measures the relative performance, is doing extremely well. So it'll be interesting to see if it can mount an attack on the all-time highs. If it does that, there's a tremendous short interest. So if, in essence, we can close above the 380 level, you're going to basically have trapped every single short that has stayed short and made the bearish case. Once they're all underwater, that could really propel a parabolic move to the upside. But that is contingent on the market taking out that key level. So at the moment, the pure momentum, which is this graph in here, I guess we're not projecting it. Okay, yeah, this is pure momentum in here. This is the relative strength versus the S&P, and this is volume. And so we're all on a positive note here and poised to potentially take out the all-time highs.
Okay, let's move on to gold, GLD, right?
Yes, GLD. Now, as you know, we've covered that with you over the past several weeks or months. I forgot where exactly we came on the show, but
I remember exactly. We came on in October, and I think we were talking when GLD was at about 113. Right now it's at 121. That's been a monumental move, and you guys were the ones that tipped us off to it. So what do you think is going to happen next?
Well, what's interesting is, in fact, if the S&P can mount a move, let's say, over the 50-day moving average, which we'll get into in a moment, you could definitely see a sell-off in GLD because, again, the S&P and the key equity indices throughout the world were under tremendous pressure. If, in fact, there's been a reset, I wouldn't be surprised to see gold sell off because it really does act as an anxiety index. So at the moment, you've got a couple of things to note, right? The first thing is we've got an inside day pattern with today's close and really a lot of compression over the last 4 or 5 days. So I would say whichever way this breaks, and at the moment, there's a good chance that it breaks to the downside. If you, in fact, have been long gold, I would certainly lighten up or get out and take another look if it gets back down to, let's say, the 119 level. So interestingly enough, where we saw Tesla, right, taking out this red line to the upside, right? The blue is a measure of today's relative strength. The red is a monthly moving average. The black here is more like a 6-month measure. So at the moment, right, with the pause in the action and the upside in the S&P, gold has been losing a little bit of steam. And so it'll be interesting to see if it does break to the downside, this pretty large move, right? We were talking about it right around this level in here, right around 113, just before the explosion to the upside. That's a pretty decent move. That's an 8 to 10% move, and taking some money off the table or exiting the trade. I've lightened up some. Would make some sense, and then take another look. I do think that overall, with the pressure on Powell to ease up on the speed of how fast he's been raising, could definitely have a positive effect on gold.
Okay. Keith, we've got time for one more chart. We're about out of our time. So did you want to do the S&P or the NASDAQ?
Let's take a look at the Qs.
Okay, QQQ. Got it.
Yeah.
I'm ready. Looks like a nice little bounce. And tell me, what do you think is going to happen next?
Well, you've now been up 5 days in a row. That in itself is pretty rare. So what do we have here? You can see we sort of, with the blue line here, that blue on the price chart above, we're in a bearish market phase. The 50-day moving average under the 200. The slope on both moving averages are down, and we're poised right around the 50-day moving average. So with that monster move, the market is a bit overbought if you take a look at market internals. So I wouldn't be surprised to see maybe a head fake above the 50 and then a failure. So the other thing to note is if you look at our momentum chart, and remember, momentum often precedes price. One thing you can see with the Qs here, our real motion indicator here started turning negative well before the price actually started to crater. Now, what we've done is we've moved back up to our 50-day of real motion, and that matches the price. So it'll be interesting to see what's happened here. I know that there are a lot of some serious players that I was talking to yesterday started getting short, so it'll be interesting to see because they have a very, very short leash on this particular trade. So if it really continues and closes a couple of days or at least a day or two above that 50-day moving average, they're going to throw in the towel. So at the moment, trade against that and be extremely flexible because this is a very, very unusual situation, especially with the geopolitics and volatility throughout the world.
Keith, thank you so much for being a participant in today's show. I look forward to our next interview.
Thank you.
My pleasure. You've been watching CEO Money with Michael Yorba. Thanks for joining with us. Don't forget, like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.